Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Friday, October 15th, 2010. This morning I'm talking about Bernanke juices the markets. And what I mean by that is Fed Chairman Bernanke was speaking earlier this morning, had an 8:15 meeting. I think he was talking in Boston. And basically, when you get these speeches like that, the market sort of weighs on every word that comes out. And it's kind of like, with every paragraph he speaks, there's a new thought. And, that could move the markets. And, we saw that happening this morning. Okay, as you can see, there's some volatility that was happening due to that speech. So I'm just taking a quick peek here at the euro. You can see, all right, right here at 8:15, boom, euro takes off versus dollar. Well, why'd that happen? Well, some of the stuff Bernanke was talking about early on in the speech, he was saying things like, central bankers around the globe should be concerned that inflation is too low. And then he was also talking about this quantitative easing 2 program, QE2, and he's was saying it's not a question of if, but how much. So, he's basically telegraphing that he wants to further ease, all right, that he wants to encourage inflation, that he needs to avoid deflation at all costs, and the markets responded in kind. So you can see here the euro on the 5-minute chart went flying up to about 141.5 before it came back here. You can look. We're going to take a quick peek at Aussie USD. You can see it just got to parity earlier before pulling back here. All right, and we can also look at dollar yen. Okay, you can see dollar yen tested that 80 handle again before coming back. Now, what happened in the middle of Bernanke's testimony is that we were getting some economic data that came out. All right, we actually had retail sales figures that came in better than expected at 0.6%, but we had CPI data that came in slightly lower than expectations at 1.1%. We also had the Empire manufacturing figures, and those came in much better than expected, besting that number by about 4 times. So it was a bit of a mixed bag, and it was really hard to determine which way the market was going to go because, it's sort of reacting to what Bernanke's saying, and we really don't know what was happening at that point. So it was kind of a light day for news. In the Eurozone, CPI data showed a gain of 1.8%, which came in as expected. So today really is, about risk themes in the market and dollar weakness, what Bernanke's trying to do. All right, so we started off, we had a bit of risk aversion going on. Then after his initial comments, we flipped the risk-taking. Now we're sort of back to risk aversion here. As you can see, we have Aussie selling off. We have Euro selling off. Pound is sort of holding in there. All right, we're going to get the minutes from the Bank of England's rate policy meeting next week, and that's really going to show us what they're thinking as far as what they're going to do if they're going to ease further. So it's really about dollar weakness right now, and we've been saying that for some time. Okay, and one of the reasons why is that Bernanke, as Fed Chairman, he's known as a great historian here and a guy who was noted for a study of the Great Depression. But if you think about it, when you talk about the Great Depression and you ask people, well, what caused it? What were the effects of it? How did we get out of it? Okay, you're going to get a lot of disagreement about what happened. What were the right policies, wrong policies? What contributed? What affected it? So it's interesting that even after all these years, all right, you still get disagreements over it, but nevertheless, Bernanke says, well, here's my interpretation of it, and we want to try and avoid this at all costs, so this is what we have to do. And right now that includes inflation and dollar weakness. That's just basic to his tenets and the fundamentals that he's trying to do here. Okay, but one thing he doesn't realize is that, if you become this great historian, you read a lot of books, all right, you may not have a good pulse on the human spirit. I mean, after all, humans make decisions, all right? So, here's what the books may say, but at the end of the day, that may not be what happens. And, we can take a look at Japan and what's happened there with their lost decade, which has been going on for actually 20 years, all right? And you can see how people weren't quick to jump back into the market. So, despite all the government intervention we're getting and setting up these false conditions that are impeding the free market, all right, we've got Bernanke here trying to throw money at the problem. We're going to get inflation. We're going to have some deflation. And, I think this problem is really getting worse. Okay, because what's going to happen is that we're going to see inflation in things like, energy, food, and these are things people need to survive. Okay, if it costs more now to transport food's going to go up because energy's up, and it's sort of like this vicious cycle. We're getting commodity prices that are higher, all right, and we're getting dollar weakness. All right, but we have a lot of differences between our economy today and the economy of the Great Depression. All right, back then we were actually an industrial powerhouse. All right, it was only 40, 50 years earlier that we had the Industrial Revolution, and there was so much manufacturing here in the U.S. that, having a weaker dollar would have been great policy so you could export your way out of these debts and these problems. But guess what? We don't make anything here anymore. Our industrial production is down so much from the Great Depression that, it's almost pointless at this point to have a weak dollar, because if you're not going to export anything, why should you have a weak dollar at that point? So it's going to be interesting to see, kind of what happens here. But, right now, dollar weakness is the key. There's two other things going on here. The next Fed meeting is actually the day after the November 2nd election, so I wonder if the outcome of those elections are going to affect what the Fed ends up doing. Okay, and lastly, this weekend on Monday, the new financial regulation laws that came out have reduced Forex leverage, so we could be seeing a lot of people reducing their positions in order to meet compliance with that. So that's sort of what I'm looking at today. Keep an eye on the volatility, and good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.